Hi, it's Nick Cata with Leo Barrick here coming at you, talking about our tax concepts for deal professionals. Today, we're going to talk about asset versus stock deals. A lot of times clients, tell you, hey, look, we're trying to buy this business. And you ask them, well, are you buying the stock of the business or are you buying the assets of the business? And oftentimes they don't know. Well, that's okay. Let me talk to you about some of the pros and cons of doing a stock versus an asset deal. When you do an asset transaction for tax purposes, more often than not, you're going to get a tax basis step up in the assets. And again, that means more depreciation, more amortization, often a higher IRR to you as a deal professional. So a lot of deal professionals prefer to do asset transactions from a tax perspective. Some of the cons of doing asset deals, are more on the legal side. It can be complicated to convey all the assets individually or contracts. But more often than not, I've seen the corporate lawyers work through that. A big thing about doing asset transactions are, if you're doing them on a partnership or a disregarded entity or even an S corporation, they can often be done with minimal tax leakage to the seller. And that makes sense because we talked about in our prior episodes, when you're buying, an interest in a partnership, an S corp, or a disregarded entity, more often than not, it's possible to get a tax basis step up there as well. So doing an asset transaction, often doesn't result in, incremental leakage to them as the seller. Where it can create an issue is if you try to do an asset transaction on a C corporation or a corporation. Remember, those entities pay entity level taxes. And so if that corporation were to try to sell some of its assets, it would incur a corporate level tax, and then it would take the cash proceeds and send it out to the shareholder, and the shareholders would likely incur an additional layer of tax. And so, while it is possible to do an asset transaction, on a corporation, more often than not, it ends up not being feasible for tax reasons because of that double layer of tax that you see there. And so that's just a point. It's important to note. A lot of clients think, hey, I'll just do an asset deal, get a tax basis step up. Yes, that's possible, but depending on the type of entity that you're buying, it may or may not be possible. So, we talked about the tax basis step up consequences of doing an asset transaction. One thing that is really important to flag also is the type of tax liabilities that you'll inherit when doing a stock versus an asset transaction. For example, if you're buying the stock of a C corporation, more often than not, you're going to inherit all the income tax, non-income tax liabilities of that corporation. So it'll require a pretty thorough, scrubbing on the due diligence side of the house. Whereas if you were to buy the assets from that corporation, if it was possible, without creating too much leakage, you would likely be succeeding to just the non-income tax items and historic exposures, not the income tax exposures, given that it's an asset transaction. So, the takeaway there is asset deals, from a tax perspective, people generally like them because you get the tax basis step up, and you also limit your liability from the tax perspective as it relates to income taxes, but still need to be concerned about non-income taxes. The other thing to be kind of cognizant about on asset deals are transfer taxes. As a deal professional, I would encourage you to raise that point frequently and early with your advisor. It's often thought about at the very last minute when you're negotiating the SPA, but I've seen deals where there were $100 million transfer tax is due on a transaction that came out of the blue and people weren't, aware of them. So I think it's really, really important to flag that, oftentimes it's a negotiated point who bears those transfer taxes, but it is an item that should be thought about and flagged sooner rather than later. That's it for now. Be sure to check out our other videos on our website or our YouTube channel. We cover a lot of different topics for deal professionals that I think you'll find very interesting.